Welcome to the Tradier Rundown. I am Jim Uriel. That's Bob Icino. I'm in a better mood now that I figure out some of the technology that was making me cranky before. But this is Tradier's Rundown. Bobby and I are the hosts of Tradier's The Trader's Edge, which is live at 3 o'clock Central Standard Time. It's the time of Chicago, the center of the civilized universe. 3 o'clock Wednesdays. It is live. Robert, how are you?
Good. How you doing, buddy?
Good. So we're going to talk about natural gas today. So I look at a natural gas chart. To me, it looks like it's waiting for a break to the downside to go lower. But where the hell can it go? It's not going to zero. I would never short it at $1.75. What do you think?
It's going to be one of those surprise events if it were to actually reverse. So we just went through 2 winters where, number one, there was the shock of Russia's invasion of Ukraine, and everybody was worried that Europe was going to have a natural gas crisis or a gas crisis in general. An energy crisis. Didn't happen. This year, especially in the US, we had a historically warm winter because of El Nino in the Gulf, right? So, and we also didn't have another. There was also some predictions that we might have issues in Europe with gas supplies, and we didn't because they didn't have a very harsh winter. And so you got seasonality in natural gas that takes place when the summer starts, and that's more weakness. But I will tell you, maybe not this year, maybe not next year, but that could be changing. Because in 2022, natural gas made up about 33% of total U.S. energy consumption. Coal only accounted for 10%. And specifically for electricity generation, in 2023, natural gas was 39%. Coal was only 17%. So we might start losing that seasonal aspect where natural gas starts to just fall off a cliff as we get into the summer. And it could start to trigger this year. You never know.
So we looked at Europe, and Europe had relied so heavily on Russia for a lot of its energy needs, and they realized obviously that was a mistake because things can change. Are we looking at natural gas more in a more favorable light? Or the climate zealots? I don't even mean to insult you people. I'm not trying to. Do the climate zealots understand natural gas for what it really is, which is relatively clean?
So publicly, no. Publicly, they don't. But in actual physical use, they have to. Because you've even got things like, obviously, the environmental pressures of coal plants being closed, but you've also got physical aging of coal plants. They haven't been shutting coal plants per se, but they're certainly not opening new ones, right? They're not drilling as aggressively for new coal as they did 30 years ago. So natural gas is getting forced into a role that the environmentalists wouldn't prefer simply by nature of it being a fossil fuel. Yet it is relatively clean burning. So again, we could see a time where the natural gas demand starts to outstrip the supply. And as you know, a lot of the natural gas supply we get is a function of shale drilling for oil. And the CapEx for that has kind of fallen off a cliff. So once these wells start to fall, it could kind of be a perfect storm for natural gas prices. But I don't think it's in the next few months.
So what are the vehicles to get exposure to natural gas? And to me, I look at that chart and I think it's got to go up above 2.25, maybe settle up there a little bit before it's going to make any type of run. I'm looking at the futures. What are the vehicles you'd use to go long natural gas or short natural gas in the event that you believe the trade was there?
Well, as always, we have the futures market, right? But a lot of people just don't have the availability to it. If you really want to get into natural gas futures, there's a new micro natural gas contract, which is real advice. Yeah, because it hasn't launched yet, but it's about to launch, and natural gas is very volatile. So because of that, you might want to look at some of the ETF products. UNG is an unleveraged ETF. There's a Bloomberg Ultra natural gas. It's a 2-time leverage. I think the symbol is BOIL, but I could be wrong on that. Those are the ones you're going to want to look for because simply the volatility in the future side may spook people out of something that they could get a good investment return on.
So when there's a leveraged ETF, and this will be my last question, it has to have optionality, it has to have decay, because that's all it's comprised of is probably options on the CME contract, correct?
Yeah, I mean that you could look at their actual disclosure documents, and it'll say that's part of the way that they get their leverage. So
okay, that's interesting. Okay, thank you guys for joining us on the Tradier's Rundown. Be sure to tune into our show, which is called Tradier's The Trader's Edge, 3 o'clock Wednesdays Central Time. Thank you guys.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc. All rights reserved. Member